Okay guys, so we're going to do a quick update of the Vanguard account, see where it is. But after I've shown you the figures, stick around because I want to talk about what happens when things go wrong. And that is quite important in trading as in investing. Now, let's have a quick look at the scenario. So at the moment, we're doing incredibly well. We've got well over 200,000 at this moment in time, but it's still fragile because a little move either way can start costing quite a bit of money. Now, when we look at this, if we take it down into the investments of what it is, I'm still keeping it relatively stable as to where we are. Okay, so I'm still using the all caps and I've got no desire to change it. Now, that's something I'm going to touch on. Now, from a performance point of view, if we look at the last year, we can see it's ramping up incredibly well. But let's take this back maybe another year. So we'll take it down into May 24. Okay, just so you can see what the difference is. And then we'll update the figures. So if I do that, you can see over the course of a relatively short period of time, it has accelerated. Now, the reason for the acceleration is that compounding effect, but it's also because I don't panic when things go wrong. So what we do is quite simple. I'm going to update the figures. Now, I've already put into the spreadsheet what the current stats are. So it's like 202,162. So you can see that's the same. But now look at it. What we have is a loss. You know, it's down from the last point that we looked at this, 0.3. Is it something I should be worried about? No. Why would I worry about that when I've just kind of shown you that in a relatively short period of time, it jumped up massively from 80 grand, like 79,000, to now over 200 in a relatively short period of time. Now, why is that? It's because I didn't panic. So let's just set this ready for when we look at this next time. So the growth at the last check was 10 grand last time. Well, 9.5 grand, rather. 5%. So that was amazing. So really, that's insignificant because the net total is better. So what we're doing at the moment is we are minus 653.61, and the check when we do it next week will be minus 0.3. Oh shit, minus 0.3. There we go. There we are, and the balance is 202,162.87, and that is today, which is the 22nd. Okay, so we're now set. We know we're in a deficit. Nothing to worry about there. It's just one of those sad things that you have to deal with. Everyone's a winner. So, the moral of the story of that, because I'm going to make this relatively quick video. It's just an update video. The moral of the story is not panicking. Now, I DCA into everything that I do. My other income streams, because you should have more than one income stream. I DCA into them as well. Okay, so if you see that on the other channel, you'll sort of see what I mean by that. But on this, what it means is as that moves backwards on itself, I'll just add more into it because I've got no desire to tinker with this for the next 4 years. I'm not going to touch it till I'm 60. You know, I'm 56 now, so I've got 4 years on it. Now, if I was in a case where I'm at my 60th birthday and I saw that 0.3, at this point, I would then start to be looking to manage this over into safer funds. Now, that could be a bond, or I might just put it into cash. Haven't quite figured out what I'm going to do at that time. But I would certainly be taking it away from the higher risk areas and put it into lower risk, because it's now time to use the fund rather than build the fund. That's a difference between them. So while I'm building, I'll let it do its thing. I won't affect it at all. So you can see all the glossy talk about the dot-com bubble, or the AI bubble rather, and the stock market's about to reset. Let it reset. I've got plenty of time for it to weather the storm. And if I get to 60 and I think it's on the rise and I need to wait another year, that's fine, because the total fund is to be closed down when I'm 65. Now that is quite a ways away. So I'll start managing at 60 and I'll have 5 years to get it into a safe haven. That's my plan. And this is what I talk about all the time. When you're investing, you can't invest and chop and change your funds. And I see it. Some of the questions that I get asked and the queries are, oh, should I move it over into this fund? Well, I can't tell you that. I'm not a financial advisor and I've got no desire to be one. But what I can say is, if you're chopping and changing all the time, timing the market is incredibly difficult. Certainly if it's long term, because they've been talking about a market crash for the last 3 years. It hasn't happened yet. And if you do change it, you might be that unlucky that that's the day, or you're that unlucky you've changed it into a worse fund and the markets continue to go. So sometimes it's better the devil you know. So that's why I'm sticking with what I've got. We're doing quite well at the moment. We have a growth that is growing fantastically. We have a fantastic return at the moment. So let the good times roll. I mean, I started this with, 1st of April this year, it was 177.99. That was the starting balance. And now we're well over 200,000, which is what I wanted to do for the entire year. So I've done 30 grand in about 6 weeks. I can live with that, guys. I can definitely live with that. Anyway, very quick update. Do hype, like, subscribe, all that sort of stuff. It does help the channel grow. I want to see it grow. And the bigger it gets, the more I'll be able to help you. And I'm always kicking around. I can never advise you what to do, but I can always tell you what I'm going to do. And in some ways, that may help you. Anyway, catch us all on the next one.